Good morning. This is George Tkaczuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. What I'd like to talk about this morning is there's a possible change in the nature of the equity markets. And more specifically, the question is, are we starting to roll over into a correction, or is this just sector rotation? Now, the reason I bring up this topic is basically we have seen a few distribution days now piling up on the NASDAQ and the S&P 500, and a distribution day is a day where the volume picks up and indexes trade to the downside. Now, the problem with this is these days have come in over, kind of been crunched together over the last 2 weeks, and we had some pretty ugly reversals. If you recall, Friday, the markets were trading up pretty strongly. The volume was kind of low, then the volume picked up, and they pretty much broke down through, especially in the S&P 500. We're looking to hold that 1635 level, and it kind of crashed through it there. Now, the NASDAQ actually is holding up pretty well. It seemed to be finding some support right at about 3450 level, although we're trading below it this morning. Now, the reason I bring up the topic of sector rotation, the sectors that are beginning to hit the hardest over the last few weeks have been the utilities. If you look at the ETF, the XLU, you'll see it's just been getting crushed. If you look at the consumer staple ETF, the XLP, you'll see that's also getting crushed. Now, if you look at the Dow Jones, the iShares, the real estate index, the IYR, that's also getting crushed. So everything that's sort of interest rate sensitive appears to be getting hit the hardest, whereas some of the growth stocks have been hanging in there pretty good. Now, that is until this morning, so we'll have to see how the volume turns out, and that might give us some clue as to, is this selling going to continue? Is it going to continue through the summer? Will we go into the sort of summer blues? That's very possible. So at this point, you want to tread lightly, meaning we're still not entering a correction, but we are what I call in a cautious uptrend. Now, with that said, the semiconductors have been acting very strongly. Actually, they were hitting new highs on Friday until the reverse. So was that the top for them, and are they going to continue downward? We don't know. It's to be seen. However, one stock I have in mind that you should at least keep on your watch list if you're not going to buy it, the name is InvenSense. The symbol is INVN. And basically, it's trying to break out past the $13 area. It hit about a high of 16 back in February, corrected, made a nice cup-shaped base, moved a little bit sideways, and Thursday and Friday was powering through that $13 area, but then it came in with the rest of the market. Now, what they do is they make motion sensors for all tablets and smartphones. They have about 100 corporate customers. Their big customers are Samsung and Nintendo. Now, they don't have Apple as a customer, and a lot of analysts believe that since they're ramping up their production to almost double, that Apple may very well be soon one of their customers. Now, over the last 3 quarters, their earnings have accelerated. They've gone from about 14% to 31% to a positive 100%. Same with their sales, also accelerated. They've gone from about 28% to about 31% to about 67%. So we're seeing some good growth there. They have a return on equity of 31% and no debt, and their estimates going forward for about 20% growth year over year for the next 2 years. It's had some good volume coming up on this right side of the base, as I've been saying. So if you can see it, if the market improves and you see this start taking out the $13 area on huge volume, that's something you might want to try. But again, at this time, the market's in a very cautious uptrend. Be very careful. You want to maybe start scaling back some positions. If you have stocks that are not acting well, you might want to be getting out of them at this point as well. So as always, let price and volume be your guide. This is George Tkaczuk with RCM Wealth Advisors reporting you from the CME Group trading floor in Chicago. Have a great trading day.